Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Now let's take a fast look at the gold market. Well guys, as you can see, our stop grabber pattern that we really has treated as the clue to current situation that could really shed light on the current situation on the gold market has worked nice and is working nice because the target of this pattern minimum the taking out of these lows. Here guys, also market has formed the bearish dynamic pressure because you could see that although trend has shifted bullish here, this price action is bearish, and that as a rule leads to the same target as the grabber points is taken out of these lows. It's approximately around 1270. Now the major question is not whether market will take out these lows, but what will happen after that, whether this will be a real breakout to the downside or that will be just a wash and rinse of these lows, return right back up. Well guys, taking into consideration the recent action, it's a plunge down, that's the downward action is much faster than any attempt on retracement, and the failure of the starting rally here and here, and the facts that right now gold market has no fundamental support, no purchases, no demand support on the physical traders, physical commodities market, significant contraction of the net long position on the gold market. It's very difficult to count on the rebound of the gold market if of course something will happen on the geopolitical scene. So that's why I think that there are a lot of chances stands in favor of the possible downward action to the 1240 area. That's what we see from the fundamental news, from the economical news. They just leave no room for counting on some unexpected resurrection on the gold market. And recent action just supports and confirms this. Still, as chances on the rebound and some retracement from these levels exist, let's see what will happen. On the 4-hour time frame chart, we see the breakout of this flag pattern that we have discussed. The one reason for the possible bounce up stands approximately at the same 1270 and the target of this extension, of this 127 extension. So you even could recognize some long-legged butterfly pattern here. This 127 extension stands at 1270 even area. So that stands below lows, and theoretically this possible retracement from this level doesn't contradict with the bearish grabber that we have on the daily, because grabber suggests as a minimum target only taken out of these lows. It could be a reason for the downward continuation, but not necessary. That's why I said that maybe we need to see what will happen, whether it will be wash and rinse of these lows or that will be a real downward continuation. That probably, as I think, has really significant value. We have the real reasons to think that it will be action lower. Still, currently you can search the possibility of taking the short with the target approximately 1270. This will be $7 per contract, not very small move. If you have taken the short position, well, that's nice. Based on the grabber, you could keep it. On the hourly time frame chart, what we see, market right now stands at the support. So market has hit the weekly pivot support one, and that's also 127 extension target from this A, B, C, D pattern. Also guys, the overall action here suggests that market will continue move lower to the 1618. That stands in agreement. It's approximately 1270 area. Stands in agreement with this extension. 127 extension of this, we could call it butterfly. Okay, that will be our short-term destination point. At the same time, the nature of this action, you can see this really plunge down, fast acceleration down, as today session has opened, suggests the further continuation to the downward action after retracement. So the chances on the downward continuation really significant. So retracement probably could reach some levels, but I think that's most suitable level for possible taking the short position stands at 1283, 1284. Circumference resistance on the hourly chart, take a look at that, is former low. And it's quite logical on the stance and the habits of the gold market, and then retests the broken previous lows. So that could happen. Also, guys, we can't exclude that market really could stop here, 1280, and continuation to the downside, because action was really significant. So that's why, as the possible solution could be scale in trade. So you could take the small 30% of your normal position at 1280. And if market will continue to move high, you could add 2/3 of your position here, and then expect a possible move down. The one negative moment that I see with the possible retracement to the confluence is that in this case market will have to erase this thrusting candle, and personally I do not want to see it. That will be a bit not very good for bearish development. So I prefer to see some minor retracement somewhere inside of this body of this really significant plunge and downward continuation. That will be perfect. Also, guys, pay attention to this pattern that I have marked with this yellow rectangle. Recall our yesterday's concern. We said market has formed a lot of grabbers here. So we need to get either vanishing of these grabbers or do not take short position and see what will happen. And I said that if you would like to take the short position based on grabber, you could do this, but you should understand the greater risk of the failure and try to take the position as close to the invalidation point of the grabber as possible. Invalidation point of the grabber stands right here. Well, and when I saw this perfect evening star pattern that have been formed here, that was the signal, in fact, for taking the short position, because that was reasonable balance, reasonable risk taken for the possible short entry. Because if I will be wrong, my loss will be really small. It's approximately $2 per contract. Okay, but reward ratio to the 1270 was significant. As market has formed the bearish pattern, you could try to take the short position, and as you can see, it has worked nice. So right now, as I said, wait for the bounce. Better to use the scaling, because currently it's difficult to forecast whether market will turn here or here. That's why, since this plunge really fast and the odds significant that market will continue action to the 1270, well, better to take still to have some position right at 1280. So let's see what will happen.